Europe released some stress test results. They wanted to show everybody that the banking sector is not about to collapse. A lot of people think we're going to go into a double-dip recession here, and so the question was, is the double-dip recession going to cause everything to go haywire in the banking sector over there? They're saying it isn't. They tested 91 banks, and these are 91 pretty big banks. If you look at these banks together, they account for 2/3 of the banking assets in Europe. So this is all the banks you've heard of, Barclays and Deutsche Bank and those sorts of names. And they all passed. Everybody thought that would be the case, and that's not a surprise because big banks have had either government support or they've been able to raise money in the market. There's nothing surprising there. And then 7 banks failed, and they're smaller banks, and there's no systemic crisis that would be caused by any of those banks collapsing. I think there's a lot of skepticism about the whole exercise. I think a lot of people see it as kind of a charade because obviously they're not going to produce test results that say that the results are poor. They would never do that. So once they decided to go ahead with the tests last month, they announced last month they were going to go ahead with the whole kind of U.S.-style stress test where you run some tests and then you publicize the results and you get banks to raise capital if they fail. So we've seen this movie before. We know how it turns out. The market will be a little more confident in the banks. And so I think the test will work in a sense in that it will make things a little easier for banks to raise money and their stock prices will rise a little bit. The problem we have right now is actually not that the tests are going to fail. The tests will work fine within a very limited context. There's not going to be a banking meltdown based on just a recession. The problem we have is that there's so much debt piled up in these economies, and there's so much government money supporting the banking sector, and these tests don't solve those problems. I mean, they can't. That's not to take issue with these tests, but we have much bigger problems than this. So what they're saying here is our banks are not going to collapse. I think that's believable. I don't think that's a stretch. I think that they will keep the banks from collapsing. The problem is that having the banks not collapse, where does that get you ultimately? One glaring weakness of this test is that they decided not to test against a sovereign default. And the thing that everyone's been worried about this year is, will Greece default, will Spain default, will Portugal default? I think Spain is the biggest worry because it's the biggest country. They have a hugely over-levered banking sector in the sense that they had a big property bubble over there, and we know that the banking sector is filled with these bad loans. So this test does not completely answer that question. By the same token, I don't think anybody thinks that there's going to be a default this year or next by Greece or Spain, because right now we're early enough in the crisis that there's still money that's being thrown at it. The problem you have is as you go down the line 3-4 years from now, at some point the money is going to run out and we're not going to be able to save everybody. So will there be a default in Greece or Spain in 2012, 2013? Nobody knows.